Hadi. Welcome to today's fundamentals. Hello, Fedra.
Hello.
What's up in the FX market?
Well, the euro is moving in a downward trajectory. One could attribute this to perhaps some signs of dollar strengthening following some financial releases that were due yesterday. For example, the ISM non-manufacturing PMI figures that came in better than expected could provide support for the Fed should they decide to hike in their next meeting. Therefore, based on that assumption, we might see some general strengthening of the greenback, therefore a weakening across major FX pairs that are correlated with the greenback, therefore potentially why the euro is moving in a downward trajectory. So the British pound is moving in a downward trajectory as well, but for the pound, I would attribute this move perhaps more to Governor Bailey's comments that perhaps the Bank of England is reaching its terminal rate. Yet, based on the current inflation levels in the UK, I do not think that the BOE is done raising interest rates. Perhaps they might raise at a more moderate pace, but I do not think that they've reached their terminal rate yet. Nonetheless, however, based on those comments, we're seeing that the British pound is moving in a downwards fashion. The Aussie is remaining unchanged, so following their interest rate decision a few days ago, it appears that they've stopped the bleeding in a sense and have remained at par with yesterday's open and closing figures. So I'd say unchanged. The dollar against the Japanese yen is moving in a downwards fashion. Slightly surprising based on the BOJ policymaker who spoke on earlier today, who stated that the bank is not near their 2% inflation target, therefore implying that the bank may have to maintain their current ultra-loose monetary policy, at least for now. However, it may have reached a level where we might see some sort of retracement, perhaps to lower ground before moving once again higher. The dollar against the Canadian dollar is moving in a slightly sideways fashion. So the reason why I'm saying slightly, it did come in slightly lower than yesterday's opening figure. However, with the BOC remaining at their current interest levels, so no major surprises and what was expected by market analysts, we would have expected some slight gaining by the dollar, but since it was expected, one could say it was already priced in. Therefore, we're seeing nothing too major in that pair. And that's it in terms of FX pairs.
And how is gold's price been reacting?
Well, based on that, the dollar is strengthening. We're seeing that the precious metal is moving in a downwards fashion. We're seeing that perhaps the dollar is more attractive. It's stronger. Therefore, for overseas investors buying gold denominated in US dollars, it's more expensive. Therefore, reduced demand, which is placing pressure on the price of gold to a downwards fashion.
And how about the US stock markets?
The US stock markets, in particular the Nasdaq 100, the Dow Jones 30, and the S&P 500 are all moving in a downwards fashion. But what is interesting with the US stock markets is that the Chinese government yesterday announced that it would be banning the use of iPhones for government officials in government buildings. And why is that interesting for traders, perhaps? China represents a huge chunk of Apple's market. So they're selling a huge amount of phones in that market. If the Chinese government is taking, even for their officials and on a general basis, some measures in order to restrict the use of iPhones, citing perhaps fears or whatever the reasoning might be, we could see a gradual tougher stance perhaps from China on Apple, considering that Foxconn, the producer of iPhones, is actually moving some of its business to India and reducing its exposure to China. We might see the Chinese government perhaps placing some more stringent measures on Apple, therefore potentially moving their stock lower given the fact that they represent a huge amount of their market.
And how about oil prices?
Oil prices, after the surprise announcement by Saudi Arabia and Russia that would be extending their production cuts well until the end of 2023, we saw oil moving higher, yet that appears to have stalled and is currently moving in a slightly downwards fashion.
And what's in today's calendar?
Well, we have a busy day today. We're noting the Eurozone's revised GDP rates for Q2, which are anticipated to weaken the euro, the US weekly initial jobless claims figure, Canada's building permits for July, and the US weekly crude oil inventories. Now, in terms of speakers, we have Philadelphia Fed President Harker, Chicago Fed President Goldsby, BOC Governor Tiff McClem. As a matter of fact, BOC Governor Tiff McClem is speaking twice. He has 2 engagements today. Therefore, we might see that the market might be reacting more to his first speech rather than the second. I'd say nothing too major will change between the first and the second, so I'd be placing emphasis on the first one where he's due to speak. We're also noting New York Fed President Williams, Atlanta Fed President Bostic, and Board Governor Bowman, for today.
Mm-hmm.
In tomorrow's Asian session, we have Atlanta Fed President Bostic and Dallas Fed President Logan, in addition to Japan's current account and their GDP revised for quarter two.
Mm-hmm. Great. Thank you, Feta, for your time, and everyone for watching. Join us after a short break for technical analysis.
Hello, and welcome to today's live technical analysis. So we're just going to be setting up our chart once again. Today we're going to be focusing on a few FX pairs, and perhaps we might be looking at Apple as well. Make sure we have everything on. Yes, so starting off with the euro against the dollar. So yesterday we placed our support and resistance levels. As you can clearly see, it's moving still in a downwards fashion. If I extend our downwards moving trend line, you can see that it's slightly broken above, yet continues to move lower. We would still maintain a bearish outlook for the pair. At this point, we could perhaps try to see downwards moving channel would not be sufficient in this case for now. It still broke above our upwards moving trend line. However, RSI rolling along the figure of 30 implies a bearish market sentiment. It's not even at the mid-range of the Bollinger Bands, and it's currently moving to test support at the 1.0670 level. So overall, we're maintaining a bearish outlook for the pair. However, I would note that based on some comments made by ECB policymakers, I would expect the ECB to hike in their next meeting. Therefore, for now, perhaps moving in downward fashion, but in the more long-term view, I would expect it perhaps to move higher. The British pound against the US dollar, so cable. So it's 3-day lows. It's moving downwards for 3 days. It's reaching levels last seen at, let's just check. It's last seen 3 months ago. So moving in a downwards fashion, but why? Why is it moving in a downwards fashion? Well, BOE Governor Bailey hinted that the bank may be reaching its terminal rate. Yet, as we said during our fundamentals, I don't expect that to be the case. Inflation in the UK is still far too high. Yes, the economy is appearing to be slowing down if you take in the Halifax prices in as well that came out earlier on today. I expect the UK economy to be perhaps not contracting, but perhaps moving at a slower pace. But inflation is still high. If inflation is still high, even if your economy is not doing that well, persistent inflationary pressures. So then you have to decide, will you attempt to protect your economy, so prevent a recession, in other words, or are you going to raise rates in order to bring inflation down and risk the possibility of a recession? That's up for the BOE to decide. But based on the comments made by the BOE governor, we're seeing the pair move in a downward trajectory. This scenario, we could actually see if we can place a downwards moving channel. coinciding with our downwards moving trend line. Uh, at the closing of this bullish block, we can see, yes, we can see a downwards moving trend line. So RSI also running along the figure of 30, implying a bullish market sentiment, combined with some fundamental based on the comments made today. We expect we maintain a bearish outlook for the pair, perhaps moving below to test support at 1.23550. Also having broken below support now turn resistance at the 1.254 level. So this is R1, R2, R3. We're removing our previous R3. And now we're on the hunt to find S3. Based on where it's at and the fact that it hasn't been moving in a very strong move, for example, this bullish block, it's moving more gradual, like steps, downward moving channel. This support level might be too far for S1. So we're gonna have to reevaluate our support levels for S2 and S3. We were, I'd say, correct slightly with S1, but we can bring it slightly lower. This could be this could be our new S1. Excuse me, R1. So it broke below, support and resistance. And now let's find our support levels. This for me would stay as S2, and then we need to find S1. I'm looking at, as I usually do, at the opening and closing of bullish and bearish candles as an indicator that there is support or resistance at that point in time. Note that it's pretty close to S2. So do we keep it at S1 and S2? The difference between R1 and R2 is about 180 pips. It's a bit much. So we may have to reevaluate support and resistance levels again. $1.240. This one. Then we have S2. 1.2310. Then you have S3 at 1.220. This is for cable. The Japanese yen appears to be gaining slightly on the dollar, at least for the day. Look how it broke above our resistance level. It validated it on numerous occasions before moving higher. This is a daily chart, however. And if we look at the 4-hour chart, I'd bring our one slightly higher, perhaps readjusting S1 to 145.45 level. And then we bring S2 to this swing high. See, swing high and swing high. Now we have our new support and resistance levels, 143.50 70. Now, I'm not going to be, I wasn't switching the previous support and resistance, and I brought it slightly higher as it could still move in a downwards fashion. And we need, well, personally, I'd like to give it some space for it to move and fluctuate a little bit before making a determined view. Because if I had this one, let's say I had this one somewhere around here, or I had it even here, far too narrow, could easily be broken within the next 15 minutes as well. It's simply put pointless for me. What we could have done, and what we might actually do, now that I'm looking at it, move this and actually bring us one higher. It's coinciding with the lower end of the Bollinger Bands as well. Has some room to breathe, let's say. Closed, validated again and again and again. Then you have S2 as a second barrier, and then S3 as the final barrier. 41.10. It's gone. Mistake. No matter. Can find it again. On 41.60. So 1 is 2 is 3, or 1 or 2 or 3. You can see that it's still moving in a slightly upwards fashion on the 4-hour chart. On the daily, it's moving slightly lower. But if you look on the daily, the weekly, and the 4-hour, they're all hinting at the same picture. Even if it is moving temporarily for the time being lower, there are signs indicating that there's a bullish momentum in the market. So this could be a small market correction lower before moving higher. Therefore, we would still maintain a bullish outlook for the pair. Yet we note that it might be reaching levels upon which we saw the BOJ intervene last time. Therefore, even if it does move higher, the question is, how much higher is it going to be moving? Now we're going to be looking at the dollar CAD. As we had placed yesterday, validating R1. Now we could say it might move towards. There is still a remnant of a bullish sentiment as it's still above the reading of 50. But since it's close, you could potentially switch to a more neutral outlook. Perhaps we'll place and we'll see if this is validated in the future. Perhaps a sideways moving channel between S1 and R1 that needs to be slightly adjusted higher. Yet, the reasoning could be that the Bank of Canada's pause was expected to be as a pause, essentially. Markets were expecting that the bank would not hike and they would not cut. However, we do note that they have left the door open for potential future rate hikes. Yet it appears that the market may have not capitalized on that, it's moving in a slightly sideways fashion. Look how the candle is nearly similar to yesterday's bearish candle. As you can see, it's currently near yesterday's open and it opened at yesterday's close. Nothing too major. There wasn't something too surprising. What would be interesting is the BOC's governor's comments today. Tiff McClellan is expected to speak twice. So, will his speech change in the second time that he's speaking, or will it be more or less the same? Therefore, based on the assumption that we're expecting nothing too major to deviate from his first speech, there might be more of an impact on the first time that he's due to speak. Therefore, the markets might be anticipating the comments by the BOC governor. Also, going to be looking at a bit of gold. Gold is moving lower. downwards moving trend line. A small rebounding of the 50, moving perhaps close to 50, but I'd still maintain a bearish outlook for the precious metal. A narrow downwards moving channel, pretty narrow, but nonetheless, actually, it's not. This bearish candle simply makes it a bit more difficult to validate the downward moving channel. We do have those support and resistance. The widening of the Bollinger Band still implies high market volatility. We'd keep S1, S2, and then for S3, we'd aim to look for the 1,865 level. So we're still maintaining bearish outlook for the precious metal, as we said before. And now to the interesting, the stock of the day, Apple. So, as I said during the fundamentals, the Chinese government is essentially banning iPhones for their government employees. It could be in retaliation for TalkTalk or the fact that they've banned Huawei's 5G antennas in Europe, citing fears of the Chinese government spying, etc., etc., etc. Nonetheless, China represents a huge portion of Apple sales. So if you're losing access to the Chinese consumer market for iPhones, that could essentially hurt your bottom line. Note this very sharp drop, which we're actually going to mark as well. From the 70 figure down to the 50, this implies a very strong bearish market sentiment. Why? Just look at how steep that drop was. It wasn't a gradual peak and then perhaps a move higher. So it was a gradual moved higher and then came back down, moved higher, or came slightly higher, came down, or even sharp drop, like 90-degree right angle drop as well. Switch from a bullish to a very bearish market outlook. So I expect the stock to move lower. As a matter of fact, I would expect it's broken below S1, S2, and is now moving towards S3. So for S2, then our new resistance level, still far too close. Actually, no, since we're removing our prior S1. This is gone. And then start with this bearish candle. Or we could give it some space and just keep in the same levels it was before. You have R1, R2, R3, S1, S2, and then for S3. And then for S3, I'd place at the 166.50 level. If the American government responds in kind. So if they face pressure or whatever, or if they try to retaliate in some way, we could see more stringent measures from the Chinese government against Apple. Note that Foxconn is slightly moving their services. We actually have to move this slightly lower. Foxconn is moving their services out of China and into India. Apple announced their first new store, seeing some movement in addition to a more political reason. Foxconn's former founder is running for uh, as a presidential candidate in the country of Taiwan, which China might see a bit as provoking. Therefore, it makes sense that they might be trying to minimize the impact that the company may have in their country. However, time will tell. That's more of a political reason. Primarily, I think it's just purely the fact that the American government is enforcing some harsh restrictions on Chinese companies, trying to reduce investments, or the CHIPS Act as well, which prohibits the sale of key components, etc., to Chinese companies, and the fact that, if I'm not mistaken, recent phone came out and it was reverse engineered by some individuals and Bloomberg, and they found out that China is actually producing their own 7 nanometer microchips. So it could be the fact that they're trying to boost their local development in terms of funneling money into domestically made products. So a lot of things are going on. So for a variety of reasons, but nonetheless, in terms of U.S. equities, we might see Apple stock for lower for the time being. And once we've finished with here, so we maintain a bearish outlook purely on a fundamental level and RSI as well. I'm going to keep this here. Stopped its drop, but I expect it to break below S1, moving towards S2. Let's just fix our 3 levels. In 40. And that does it for today. Thank you for watching. Have a great day.
Hi everyone, welcome to today's webinar. So for today's session, we're going to be talking about divergence trading. In the meantime, we're going to give a couple more minutes to let more people join the session before we get started. So give about maybe 2 to 3 more minutes. So in the meantime, let me know in the chat if you can hear me and see me clearly as well. And you can see the slides. Yeah, and feel free to get yourselves a drink, make yourselves comfortable, and I will see you guys in about 2 more minutes. If at the end of the webinar we have time, we probably will have time after we're done with the slides. So let me know in the chat as well if there are any setups you'd like to see. We'll definitely have time to go through a couple of them after we're done with the slides. And then we can take a look at some live analysis of implementing divergence trading as well. So feel free to let me know in the chat if there are any specific currencies or commodities or indexes that you'd like to see. Okay, let's go ahead and get right into it. So first things first, as per usual, a disclaimer. Our products are traded on margin and carry a high level of risk, and it's possible to lose all of your capital. These products may or may not be suitable for everyone, and you should ensure that you understand the risks involved. Disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. The material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Okay, I am Melanie and I will be your speaker for today. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019, 2020, and 2021. Okay, so here's our agenda for today. Firstly, we'll go through what exactly is divergence in trading, and then what indicators you can use, and then we'll go through a couple of these indicators, so stochastic, RSI, MACD, divergences, so on and so forth. And then we'll go through the different types of divergences, such as normal, hidden, and exaggerated, and then we'll combine them together for high probability setups. So if you see me looking towards the side for a lot of the webinars, because I have another screen here. But let me know in the chat as well throughout the webinar if you have any questions. I'll also be keeping an eye out on the chat. Okay, let's go ahead and get started. So divergence in trading is a technical analysis concept that compares the movement of a security's price and an indicator, such as an oscillator, to identify potential trend changes. Can you guys hear me? Testing. Okay, because it doesn't show that my audio is being recorded. Okay, but no worries, let's go ahead and continue. Sorry about that. Okay, so there are two main types of divergences. We have bullish as well as bearish divergence. And I've included a chart here for you guys to see the different types of divergences. But basically a bullish divergence occurs when the security's price makes a lower low, while the indicator makes a higher low. So this suggests that the downward momentum of the security is losing strength and the potential upward trend may emerge. So on the other hand, we have bearish divergence. So that occurs when the security's price makes a higher high, while the indicator makes a lower high. So this suggests that the upward momentum of the security is losing strength and a potential downward trend may emerge. So it's important to note that divergence is a potential early warning sign of a trend change, but not a guarantee. So traders will often use other technical analysis tools to support the divergence signals. So these can include trend lines, chart patterns, so on and so forth to confirm the divergence signal and make trading decisions. So we'll take a look at a couple of examples. Firstly, in this example, we have price making a higher high, slightly higher high on our price chart. And then on our RSI, in this example, we are using RSI, it's making a lower high. So you can see price is showing us a descending trend line, whereas on our price chart, it's giving us a increasing trend line. So first point, price is testing a key horizontal resistance level with price making a small high, resulting in bearish divergence with RSI. Since on point number 2, our descending resistance line on RSI caught the past two reversals correctly. So it forecasts that we could be seeing a reversal here. So this is exactly what happened after that. Immediately after we've identified the bearish divergence, we can see how price reverses strongly off of the horizontal resistance, RSI resistance, and the bearish divergence. You can see this is what happened on the RSI as well. In our second example, once again, we have a bearish divergence, but in this case, it's quite small. So bearish divergences can be significant, like the one we saw earlier, where it's a whole resistance level, whereas but there are also cases where bearish divergences can occur as just a small increase or a smaller high or a smaller low on the stochastic or RSI charts. So in this case, we're using a stochastic oscillator and it's made a lower high in this case, whereas on price, it's made a higher high. So you can see after that, after we identified that, price continued moving together. And then we saw this repeated pattern here where price is making a lower high. Once again, price makes a higher high on our price chart, whereas stochastic makes a lower high. This is also what we call a hidden resistance level, since there are two swing highs that line up nicely at this 94.98 level. Okay, so once you've identified that, then you can expect price to reverse off, since given our RSI, it is the same resistance level. But on our price chart, on our price chart, you can see how price has increased. Is this telling us that price is likely to continue to drop after this point? And you see that's exactly what happened immediately after this section here. Okay, Next, we're going to take a look at divergence potential. In this case, we're using an RSI instead. So if we take a look at the price chart, first point is that we always want to take note of where the bearish divergence starts, as this is the level where it tends to reverse to. So we have price making a higher high on price chart, and on our RSI, it's making a lower high. So this is obviously a bearish divergence, and you can see we highlighted this starting point or the starting area because we're expecting price to reverse off of this area after we identified this bearish divergence. And that's exactly what it did. It reversed off and it retraced back to this level here. So this is combination of what we call a pullback, in this case a pullback support, because we are expecting price to price has broken out of this resistance. It's broken out of this resistance and it's retracing back, and it has bounced off of this level. So now becomes an overlap support level. So if you were here for our support and resistance series, this is just a recap for you. But if not, no worries. That's just a brief summary of what is happening here. Okay, so next we have forecasting breakouts. On our price chart, we have an ascending trend line. Remember, for a valid ascending trend line, we use we need three significant swing lows for it to be considered a valid trend line. So in this case, we have definitely more than 3 points on the line. Same goes for our RSI. You can see at the first point, or rather the first area that we've highlighted, RSI broke the ascending support line or trend line before price did. So this forecast that price might break it. So you can see it continues up. Over here, it continues upwards, whereas on our RSI, it has made a lower high. So right after this point, you can see that's exactly what it did. It's barely breaking out of the ascending support line, but shows strong reset bearish divergence against the RSI. Point number 3, RSI breakout plus bearish divergence as well as the price breaking out gives us a high probability that price is going to reverse immediately after this line. You can see that's exactly what it did. It reversed off and it dropped strongly. Okay, next, let's take a look at another example. In this example, we're using an RSI indicator once again. Here we have a descending trend line on our RSI. Over here on our price chart, we don't quite have an ascending trend line, or rather the descending trend line, because as I mentioned earlier, for it to be a valid trend line, we need 3 significant touches, and in this case, we only have 2. So we've highlighted this point here because price is, or rather RSI, is breaking out of this descending trend line or descending resistance. So after this, we're expecting price to shoot up and continue within this ascending trend line. You can see that's exactly what it did here. So price is now testing this trend line and we're wondering if it's going to break out of it. So that's the first point. Second point, we see this descending line breakout or descending trend line breakout of on our RSI chart. And third point, we have a bullish divergence. So remember, for bullish divergence, price is making a lower low, and RSI, or whichever indicator you choose to use, so it can be RSI, MACD, stochastic, whatever oscillator you choose, that indicator will show a higher low. So that is a bullish divergence. And over here we have that. And combining all of these 3 points, it suggests that we could be seeing a very strong reversal on our price chart. Okay, so you can see that's exactly what happened. It reversed off of the swing low and breaks out of our ascending trend line, or rather descending trend line. Okay, let me know if there are any questions so far. Okay, next we'll take a look at some GIFs. So if we're just taking a look at the image that I have here, we have price moving in a decreasing or rather a descending trend channel over here. So price is moving within this descending trend channel and it's making a lower low. And this is on our price chart. Whereas over here, okay, it doesn't show, but I'm using a stochastic indicator here. So on this stochastic indicator, price has made a higher low. So this gives us a bullish divergence. Okay, let me just check the question. Can we take a long position here? Yeah. So I'm just getting to that. So between these 2 points, price has made a lower low on our price chart and it's made a higher low on our RSI. So that in combination with this resistance at the swing high here, that lines up nicely with a 100% Fibonacci projection. So all of that gives us this, or rather it suggests that price is going to break out of our descending trend channel. You can see that's exactly what happened here. So after it breaks out, then we'll go in for a long position or we're going for a buy from here right up to this level here. And the reason why we stop at this level, or rather we put our take profit at this level, is because of the confluence area. So we have a swing high resistance here, and actually I can pull it back a little bit further to maybe this swing low. And the reason for that is to make it an overlap resistance. Once again, if you were at our support and resistance webinar, you'd know that overlap resistance levels or overlap support levels are where the bulls and the bears are respecting that level, which makes it very significant. So that in combination with this 100% Fibonacci projection level make it a really significant confluence area. And you can see how many times price ended up testing that level. So firstly, 2 points here, price breaks out, price reverses, it shoots right up, breaks out of the descending trend channel, and reaches our take profit at this resistance level here. But it's not likely to break out of it because of the confluence area. Okay, I hope that was clear. We can just stop here for a while so you can watch the GIF a couple of times. Which time frame should you use for high probability? Divergence trading is normally for pretty short term trades, so it's not really recommended for long-term trading. So you could use it for minutes or I think maximum maybe the 4-hour chart. I wouldn't go more than 4 hours. Okay. Okay. Let's take a look at another bullish divergence example, and then we'll take a look at a couple of charts and see if we can find any divergences there. So in this bullish divergence example, we have price making a lower low. Okay, price has made a lower low, whereas on our stochastic, price has made a higher low. So it's quite a minimal difference. So you might not be able to spot it. So it takes a bit of practice, but if you use these vertical lines, it really helps you to section off the areas and take a look at the differences. So in this case, we don't have any Fibonacci levels that line up with each other. We're just purely looking at the higher lows and the lower lows. But because price has made a lower low, RSI, or stochastic in this case, is giving us a higher low, then we can expect price to shoot up immediately after this second vertical line. You can see on our GIF, that's exactly what happened. You can see how it immediately shoots up after that. So you can use this kind of as a forecast or prediction of whether prices are going to drop or go up. Okay. Now let's take a look at some charts because that's the end of our slides. So let me know in the chat if there are any setups you'd like me to go through, and then we will take a look at some divergences as well in those setups. Okay, maybe to kick things off, we can go ahead and take a look at DXY first. While you guys are letting me know in the chat what you'd like to see. Okay, so first things first, we're going to start off by looking at the higher time frames, just so we have an idea of where prices are headed towards. So on our DXY, prices are moving downwards, pretty bearish over here. On our daily time frame, pretty bearish as well, although it does look like there is a reversal here. Let's see if we have a descending trend line. Okay, it looks like price has recently broken out of this descending trend line. So it's giving us a bullish signal here. Okay. Now on our daily time frame, it's also bullish here. Okay. So we have a ascending trend line here. Once again, I'll remind you guys that for a valid trend line, we need 3 touches at least. Okay, now that we have the general direction or trend line, then we can go in with our support and resistance levels. So here it's going to be my first support level. And my first resistance level just here. And here is my second support. Okay, now that we have that, then we'll go in with our Fibonacci levels now. So I'm going to start off by looking at a retracement. So for retracement, we use 5 levels, 23.6, 30.2, 50, 61.8, and 78.6. And I can see that my 23.6 lines up nicely with my second support. Okay, so I'm just going to keep that. Okay, and then I'm looking for another retracement. So my 38.2 lines up with my first support. And my 50% as well lines up with my second support. So these tend to be areas more than levels. So it's fine if it doesn't exactly line up with the level itself. Okay, and the reason why we're doing this is to look for confluence areas, as I mentioned earlier. Okay. Now I'm going to go in by looking for projection levels. So for projection, we use these three levels. Okay. I can see my 61.8 and 100% line up nicely. Okay, just gonna highlight this level because it's quite okay, because we have so many Fibonacci levels lining up at this second support here. Okay, I think that's all the levels that we have. Now let's go in with our indicators. So we like to start off by looking at Ichimoku as well as MACD, because for these two indicators at one glance, it tells you exactly what the signals are. Price is moving above the Ichimoku cloud, giving us a bullish signal. Whereas on our MACD, it's kind of giving us a bit of a bearish signal there. Okay, so let's take a look at RSI and see if we can find any signals here. Okay, so as I mentioned earlier, we have a hidden resistance here. So when you're looking at RSI, we can look for a couple of things. Firstly would be for an ascending trend line. Obviously here we don't have a valid ascending trend line since we only have 2 points. Okay, so that's the first thing you can look out for. Next thing would be to look out for divergences. In this case, I was looking between here to here, but you can see price made a higher low and price made a higher low and our RSI also made a higher low. So this is not a divergence. Next, you can look for hidden resistances or supports. In this case, I found a hidden resistance here. Okay, and you can see over here, price actually made, oops, sorry about that. Price actually made a higher high. So this also is considered a divergence. I don't know why that keeps happening. Okay. I'll try to get that sorted out for next webinar, but just bear with me for the time being. So yes, hidden resistance on our RSI price me a higher high over here, from here to here. Okay, you want to make sure that you're comparing the tops here. So what does this mean? This could suggest that price is likely to continue to drop since it's reversing off of the first resistance. Okay, and that lines up nicely with our MACD as well, since price is, or rather since MACD is giving us a bearish signal. So we can expect price to continue to drop, since it's already in the process of dropping from here. Okay, this is my intermediate resistance. From here all the way down to our first support. But we're not likely to see a break out of the first support or even out of this ascending trend line, because there is still upward pressure from, as we saw earlier in the previous time frame, the daily time frame, price broke out recently out of the descending trend line. So it's giving us a bullish signal. Here we also have an ascending trend line, so also bullish signal, and also our this area here that I didn't highlight earlier, 38.2 as well as the 61.8, plus this overlap first support is also a confluence area. So we're not likely to see it break out of here, but it is going to continue to drop towards our first support. Okay, and once it drops towards our first support, we can likely see it reverse again. Okay. Any questions so far? Okay. If not, let's take a look at our next chart. Maybe we'll go ahead and take a look at dollar franc. Okay, same thing, we're going to look at the higher time frames first. Okay, we see it dropping significantly on our weekly time frame, on our daily time frame as well. Okay, and we also have this descending trend line. Okay, so it does look like price is going to reverse out of this descending trend line, but this is the daily time frame. So let's take a look at the 4-hour time frame. So earlier we had a question on which time frame would be the best for high probability. So for, as I mentioned earlier, for divergences, they're normally for short-term trading purposes, which is why I said either the minutes or hourly. But I will say also that we normally wouldn't recommend anything less than 15 minutes, because there tends to be too much noise and it's quite difficult to trade on those timeframes as well. So we try to keep it between the 30-minute range to maybe about the 4-hour range for divergence trading. Yeah. So in this case, you can see I have been observing or rather taking note of the 1 week and daily time frames, but we also trade, or rather we do our analysis on the 1 hour and 4-hour time frames mostly. Okay, here we also have a descending trend line. Next, I'm going to go in with support and resistance levels again. So here's my first resistance and first support here. So for these levels, we just use the closest swing high or swing lows to where price is at and then see how far we can pull it back. Okay. So same thing, I'm going to go in with our Fibonacci levels. I'm looking for a retracement here. Okay. Uh, okay, I can see my 50% lines up with my first resistance. 38.2 is a little bit far from my second support. So I'm just going to count this 50%. Yeah. Okay, next, let's take a look at projection levels. Okay, no projection levels there. Okay, I think that's all the levels that we have over here. Oh, I think we have one more retracement here. Okay, we have a 23.6 and 38.2 that line up nicely as well. Okay, now let's go in with our indicators. And by looking over here, we have a pretty bearish view because of this resistance level here. And also the downward pressure from our trend line. Okay, price is moving above the Ichimoku cloud, giving us a bullish signal. MACD isn't telling us much. Let's see. Okay, it's not telling us much. So it's still ranging, okay, on our MACD. Let's take a look at RSI. Okay, so I see a descending trend line here. Okay, so even though we have this descending trend line, on our price chart, of course, we have our first resistance between these 2 points here. Okay, so this is a sign that price is likely to continue to drop. So I'm going to remove our Ichimoku because it doesn't support our analysis. So price is currently testing our first resistance. It's likely to continue to test it and then reverse off of it and head towards our first support. Okay, let me know if there are any questions so far. Okay, I want to maybe give you guys another example of a divergence over here. Okay, from here to here. We can see that price has made a lower low here, whereas on our RSI, price has made a higher low. So let me know in the chat if you think this is a bullish divergence or a bearish divergence. Okay, so this is a bullish divergence. Okay, so we'll follow whatever the signal is on the indicator that you're using, RSI, stochastic MACD, whatever it is. So if we play, this is in replay mode, but if we play it, you can see exactly once we've identified that there is a bullish divergence, right after that, price has shot up. Okay, and that's what this movement here is what we are looking for when we make use of divergences. Okay. Okay, I think we have time for maybe one more setup. Maybe we'll go ahead and take a look at gold now. Okay, on our weekly time frame first. Okay, price looks like it's moving downwards. Daily time frame as well, pretty bearish here. Okay, and we have price moving within this descending trend channel. So for descending trend channel, just to recap, we want two tops and two bottoms. Okay. Let's take a look at the 4-hour time frame. Oop. Here we have a very obvious descending trend line. Okay, and we also maybe have a trend channel. Okay, so two tops, two bottoms here, and a descending trend line. Now we're going with our support and resistance levels. Here's my first support. Okay, and this level here is my first resistance. And then second resistance. Just over here. Okay, so all of these levels are purely based on support and resistance, pullback, overlap levels, swing high, swing lows. As you can see, we'll then go in with Fibonacci levels to then move the levels around to more appropriate levels if necessary. So you can see my 38.2 lines up nicely with my second resistance, 23.6 as well. Next, our projection. Okay, we have a 100% that lines up with our first support. Okay, now let's take a look at the indicators. Ichimoku, MACD. Price is moving below the Ichimoku cloud, giving us a bearish signal. MACD is slightly bullish. So this is something that you might encounter quite frequently because there are so many indicators. 50% of them will tell you that it's bullish, 50% will tell you that's bearish. So just pick a few that you are comfortable using and that you are confident in using. And then, yeah, just stick to those indicators. Here we have a trend line, descending trend line as well on our RSI. Okay. I'm also seeing a hidden support level here. Whereas you can see here that price has definitely made lower lows. Okay. So this tells us that price is likely to reach a point where it's going to reverse off of a support level. And that support level could definitely be our first support. But also because we have this trend channel, and it doesn't look like it's going to break out of the trend channel anytime soon. So we could see it. I'm just going to remove this trend line. So we could see it bounce off as we do see it now. So it's likely to bounce off and continue going within our descending trend channel. Okay, so ultimately still pretty bearish on the gold, but it's as of now, we're likely to see it reverse off and continue upwards within the descending trend channel. Okay, and that's all thanks to this hidden support level here. Okay, let me know if there are any questions. If not, that's all that I have for you guys today. Thank you guys so much for joining me, and I will see you guys next week. Bye. Thank you. Bye, everyone.